What an absolute banger of a day. All right. We got these shorts in. We sold them at the open for 100%. We caught the bottoms, and now we're waiting for a bounce. Without further ado, thank you so much for your likes, your comments, subscribes. In today's video, I'm going to go over the indices market. We're going to go over the crypto market. We're going to go over the bond market and the dollar. All right. So without further ado, let's get right into it. All right. Let me just start the video off. Let me just get this here for the clout. I posted a, I was buying into puts here, sold them 100% this morning. Nice, cool. Lots of people made money. All right. And then, of course, as we continued falling lower, I was buying into more and more calls, mostly expiring the beginning of next week and October 1st. So the end of next week. And I really do think that we will see a bounce in the market. The number one reason for that is this picture I'm going to show you right now. So if we gap down tomorrow, because currently the SPY is extremely overextended outside of the lower level of the B band, right? And here I shared a picture saying, we haven't gapped down lower since since February 2020. So if we gap down lower, I'm going to be way more aggressive with calls. I kind of really botched up this tweet. All I had to do was read it. But yeah, that's life. Anyway, so essentially back in February of 2020, right, during the COVID crisis, you can see the SPY was trading very outside of the lower level of the B band. The only time that's happened since this time is, wow, I'm botching it all over the place. But literally, we haven't gapped down twice since the COVID crisis, okay? So now the odds of us gapping down even lower tomorrow, very, very low. And literally the only other time that's happened was back in February of 2020. So that's why I said if we do fall down lower tomorrow, I'm going to be more aggressive with calls in terms of the expiration date, as well as the money that I'm putting towards it. Okay, so essentially, yeah, that's that. If you've continued watching the video, I appreciate you. Okay. Anyway, so this is a chart of the SPY. You can see that it's clearly very, very overextended to the downside, right? I was showing that the RSI going lower while the MACD was increasing was a huge warning signal. The fact that we closed below multiple important levels of support on the SPY was also a huge warning signal. And that's why we entered into shorts. And literally, like, the target was met, like, way down here. Okay, so it worked out perfectly. Okay, so now what can we do moving forward? All right, so number one, the SPY, the RSI is not yet completely oversold. All right, earlier on in the day, it did fall down to 30.2, right? But it didn't close oversold. All right, so what might end up happening now is, I wouldn't be surprised if they did this, is if we did fall back down to these 429 levels here, where we did fall earlier, and then bounce it. Okay, that would create the most pain for retail traders. And if we're coming into an environment right now where a lot of funds and banks are losing a lot of money, they're going to have to take that money from messing around and basically shaking out retail investors out of trades and making retail investors lose money, right? It was very, very similar, essentially, to what happened during the COVID crisis. So you could literally feel things were manipulated and things were literally, like, made for the average trader to lose money. Okay, so we're going to go back and see, we're just going to have to wait and see tomorrow to see what happens into the day. But essentially, for now, the SPY needs to hold this 429 level, essentially, the 618% fib level. And it really did act as a good level of support today. We did, break down a little bit below it, but that's to be expected, especially when the entire market internationally is plummeting, right? So there's the analysis on the SPY. Obviously, these are the resistance levels on top. These are the support levels to the bottom. Currently, we're in a bunch of calls on the SPY and the IWM, looking for a target to 439 to 440 at least currently. So now we can go ahead and take a look at the IWM. All right. So we also bought into calls here on the IWM. It held the 786% fib level down here at 214.78. And you can see that, we did shoot down a bit lower. Very similar to what happened on the SPY. That's fine. And now, targets to the upside on the IWM are going to be at least 219 to 220. Especially if we do have a sharp rally reversal tomorrow, which is what I'm hoping for, right? You can see the RSI and the IWM did not fall as sharply. That's because we closed much higher than we were, right? The RSI was actually much lower during the day, but it closed up here. So this isn't necessarily the most bullish signal, all right? And one of the reasons that the IWM doesn't look as bullish as the other indices is because the Fed is going to be talking about rates tomorrow. So if these rate talks essentially go bearishly and he says, we're going to start increasing rates, or he says something like detrimental to banks, then essentially what's going to happen is the IWM is not going to bounce as planned, right? But we just have to wait and see. 214.78 held. The next levels of resistance are going to be these 218 levels here. And aside from that, to get a more detailed explanation of what will happen is we have to look at the 10-year yield and the 30-year yield as well as the dollar. All right. But for now, that's really it on the IWM. There's not much else really to say here. Next, we can go ahead and take a look at the NASDAQ. So the NASDAQ obviously also fell very sharply. The RSI sharply fell, which is a good sign. The MACD also fell across the board on all three indices. We closed above this 786% fib level at 364 and 364.80. And we also almost retested the lower level of this fib completely back down to 359.96. Okay, so the NASDAQ took a massive slap in the face compared to the strength that it was showing before, right? But it wasn't the biggest loser today, right? The biggest loser was the IWM. So the reason why I got into IWM calls along with SPY calls is because the IWM was the biggest loser and the SPY was trading outside of the lower level of the B band much more than the other two indices. Okay, so now going back to the NASDAQ, you can see the NASDAQ is not trading outside of the lower level of the B band just as much as the SPY is, right? And I didn't really bother getting into NASDAQ calls as much because my exposure with the SPY calls was enough for this play, right? Essentially, we just need to hold 364.80 and, the lows for today. But we did technically make a higher low, if you want to consider this a higher low on the NASDAQ. But with the SPY, we have made a lower low. So now we just need to see if, honestly, I don't want to look down here, but just taking it one day at a time, if tomorrow we gap down lower, then I will definitely most likely be buying into more calls, but I'll be buying them for this Friday expiration. Because if we go back to last year, right, things were very, very choppy, right? And say, for example, this is us today, right? This huge red candle, that's cool, right? And then we end up gapping even lower tomorrow, right? What ends up happening is people need to cover their shorts and essentially it rallies, right? So that's what we're going to be playing for tomorrow, okay? This entire move here does not apply to us currently because we are not, this move here, over here, it's not overextended, okay? But, can you guys not even, wow, you guys can't see my cursor. That's unfortunate. All right, here we are. All right, so basically, all of this has already happened for us on the SPY, okay? So now, essentially, if we are right here, if this is us today, and we gap down even lower, right? What is going to end up happening is we're going to sharply reverse, okay? Even in the worst market conditions, what always ends up happening is when we do have a vomit to the downside, there is a sharp reversal, okay? So literally, like, we closed down here, looked very weak, sharp reversal in one day. And back in February and March, it was literally up, down, up, down, up, down every single day. So if there are 2 days where we are sharply falling down, like here on the SPY currently, then that is a very, very good signal to buy into calls for shorter term and get more aggressive. All right. So there's basically the analysis on all three indices. I'm hoping for a bounce, and things are pointed towards it, because if you literally look at every single time the SPY has been this overextended to the downside in the past year and a half, every single time this has happened, we've sharply reversed. Okay, so I mean, this isn't even a joke. Like, this is one of the safest plays that you could have made this entire year. And of course, the 100% success rate play that I shared over here, where, the NASDAQ was trading outside of the upper level of the B band. If you had bought puts for 2 to 3 months out, they're 100% profitable. And of course, today you would have cashed out huge. So that trade worked out as well. There's the analysis on the overall indices market. Now let's go ahead and let's talk about the bonds. All right, so if the 10-year yield and the dollar are bullish, then the IWM is going to be bullish. All right, so right now, we're still in this bullish structure. This is a bull flag. You can see that the MACD barely crossed up above, but now the price of the 10-year yield looks like it's going to close below the 20 exponential moving average, which is not a good sign. The RSI did sharply fall, which is a good sign. And essentially, if we can find support, at 1.3 or maybe 1.26, regardless, somewhere in this bullish structure of support, that would still mean, this is bullish, right? Now, let's go ahead and take a look at the 30-year yield. The 30-year yield actually looks like it's about to close above the 20 exponential moving average. It held these levels of support. And if this is the case, then that is good for the NASDAQ. So this is the 30-year yield. If the 30-year yield and the dollar are both bullish, then it's good for the NASDAQ. Okay? So currently you can see this is also a bull flag. We held multiple levels of support, and now we had a strong reversal to the upside, which is a good signal for the NASDAQ and for value growth. Yeah. So that's essentially it for the bonds. Now let's go ahead and take a look at the dollar. So the dollar, clearly very, very overextended. There was a scare in the market. That's why a lot of people just wanted their money in cash. So that's understandable. So we can see that it overextended outside of the upper level of the B band. Very, very overextended now. So now it essentially probably will fall back down to 92.94. Start to accumulate a bit, and then see if there's going to be another leg up on the dollar, okay? So the dollar overall still looks very bullish. So does the 30-year yield, and so does the 10-year yield. So, I mean, at this point, it's just a toss-up, and we just have to see and monitor them every single day. That's really it. Aside from that, let's go ahead and take a look at crude oil now. So crude oil looks like it's going to be closing below this 38.2% fib level at 71. It is working off of overbought on the MACD. It looks like it can cross below, which will probably send it to the 50% fib level, or in between the 618% fib level to the 50%. So essentially, things don't look entirely great for crude oil, but it did come back to retest the breakout point of this bull flag. So now we just need to see if that level can hold, right? So overall, there's the analysis on the indices market. Now let's go ahead and take a look at the crypto market. So here's Bitcoin. So Bitcoin actually is now back to this very, very important trend line that we've been monitoring for quite some time. If you put this chart in a log chart, you will see that this green trend line, where I was just showing this green trend line, it acted as an uptrend support since November of 2020, okay? And we have been parabolic this entire time, but then the day that we crossed below it was that day that we capitulated all the way down from 41,000 to 30,000, okay? So now when you turn this chart off of log, you can see now that it is actually acting as support. Okay, so this very, very important trend line in log, right? It was a support level back here in May, but out of log, it's now acting as support once more currently. Okay, and we were looking at this support level back in July, and it held multiple times, right? And it was tested around multiple times. So now we're back here. But this whole formation currently is a bear flag, and it's not bullish at all. And another really, really important thing to consider is that the MACD on Bitcoin is still oversold, or is still overbought. So it still needs to cross down below. And that is not a good sign. So, I mean, yeah, there's still lots of more downward room to go, essentially, on Bitcoin. A very, very important level of support now that needs to hold is going to be 41,500. So I do expect this to fall below this level and potentially even close below this trend line today, right? But then 41,500 is going to be very, very important for Bitcoin to hold. You know, what's actually interesting is when you look at Ethereum, Ethereum actually did cross below on the MACD, right? And it didn't actually fall as bad as what Bitcoin looks like it's about to fall right now. But the fact that it did cross below on the MACD, and it's still holding, you know, some of these very important levels of support. So, I mean, and the levels of support are actually much closer on Ethereum than they are on Bitcoin. So, you know, this is still a bear flag. It still is not a bullish formation on Ethereum. But if Ethereum can find support faster than Bitcoin does, and Ethereum starts to bounce, then that could be very, very bullish for Bitcoin as well. Okay, so I mean, currently, this is the biggest problem right now. The MACD still has lots of potential room to go to the downside. It's kind of not a good opportunity right now to go short on anything yet. But yeah, for crypto in general, if you're trying to trade, just trade the shorter term time frames. But if you want to look to, you know, find like a really good long term play, I would wait for 41,500 at least on Bitcoin. But I mean, again, like this entire space is going to skyrocket and boom. It's going to be great in the next few years. Bitcoin's going to 100, 200,000 regardless. So yeah, just buy and hold. Anyway, I hope you guys enjoyed the video. I will see you guys tomorrow. Thank you so much for watching. Thank you. Bye.